All right, thanks guys for tuning into the Wealth Project. Today our topic is recovery stocks, mainly on the travel side. So we're going to be discussing Airbnb, the big Grab SPAC, Carnival Cruises, and I believe we have one more, Rolls-Royce.
Yep.
What are we going to start with, boys?
So our number 4 stock is Carnival Cruise, ticker symbol CCL. The reason we picked this one from other cruises is obviously they're a global cruise company, so they're not in one specific sort of country region. They're global. So the CEO said that he predicts that most of the cruises will come back this year. So I think that's a little bit optimistic, but I think by the end of this year / next year, with more people getting the jab, more people are going to be booking holidays in sort of the leisure and travel industry. Obviously, that's been really hit hard over the pandemic. But people have been stuck indoors for so long that people just want to go outside and people want to go on holidays more than, they usually would. So Carnival Cruise is our number 4th stock. So if you've got anything to add to that.
Yeah, well, I always wonder with cruises will probably be the last thing to pick up, just because you're in a confined space for people. And obviously without mass COVID vaccinations, it's very hard to be in a confined space with someone safely. I saw Carnival Spain and Germany both were hoping to start cruise again by May. But to be honest, that looks very unlikely, to be honest. There was also news that they sold 19 cruise ships during the year.
Yeah, I saw it. Yeah.
Yeah, so you can either take that how you want. Either they need the cash because they are struggling, and they obviously cash flows everything, but it looks like it's certainly going to be a while before they can run cruises again. Or you could view it as they've just basically hoping to buy new cruises and just sold off old stock, basically.
Yeah, I think that's the whole cost savings. So obviously, by getting rid of the older ships, it saves them obviously for future sort of debt. Their sales were going up, I think, like 33% each year. Obviously, apart from the most previous year, but it's quite difficult to look at their financials and take into account the previous year, because if you look at any stock, in that sort of industry, they're all down. I think with this year, obviously with the CEO thinking, cruises are going to return, I don't think we'll see the sales they were pre-COVID. I think people are going to slowly ease into this because it is such a confined space. It's not like going on holiday and sort of booking a more recluse sort of hotel, destination. So I think the end of this year, we'll see sales slowly come back, and then hopefully, obviously reliant on the pandemic and seeing how, well it does. Next year, we'll start seeing sales increase a hell of a lot more. And then from there, I think the whole travel industry will just boom from there. And I think we will start testing highs. And I think from there, we're going to see possibly some new all-time highs, just because people will, most people go traveling once, twice a year when they book away. But people trying to book sort of 4 to 5 holidays at a time of the year just because they've been stuck at home. So
yeah, it's like a backlog of people who want to travel.
Yeah.
And yeah, my only concern is basically that a lot of the controversy, a lot of the issues surrounding COVID initially were in cruise ships. So is there a stigma still there or anything? But that's the only thing.
Yeah, I mean, the only downside, obviously, if they do all open up, is the whole vaccine passport. And we've obviously seen that with flights, and it's whether cruises will introduce that as well. That obviously, you have to be vaccinated to to get on these. But I think by the time cruises are up and running to, you know, their full capacity and full sales, you know, the way even the UK is going, I think most people will be vaccinated. I think most people that go on cruises are at least sort of 30 to 40 plus, which is a little bit ageist, but I would say
it's accurate.
Yeah, it's accurate. Yeah. But you know, those sort of ages are the ones that are, you know, going to get vaccinated first. So I don't think the vaccine passport will have a huge effect. It will this year, but we're still in the pandemic, and obviously with France back on lockdown and a few other countries, we're still in sort of uncharted territory with the cruise ships, you know, going back up and running full time.
Yep.
Yeah.
And they also had a rally, right?
Yeah.
Oh, sorry.
They might have gone.
Oh no, I was just mentioning that their stock price has already rallied, hasn't it?
It rallied from 1551 and it's now at 1600.
Okay.
So yeah, it's been looking fairly good. It's just, promise you sort of take it with a pinch of salt at this stage, don't you? It's quite hard to tell where it will go because there hasn't been a lot of news coming out about sort of significant changes in how cruises and how holidays will work yet.
Yeah. The reason we obviously picked it for number 4 is to get in early, because once these cruises are up and running, you're too late to the game. So
yeah,
you could have got in a better price, but like most stocks, it's so easy to see that now. You know, it's an obvious play. But I think still at these current prices, I think they're a very good price to get into. You know, with a possible 2 to 3x, and depending on how travel reacts to post-COVID, you could see more.
Yeah, the weird thing about there's a few analysts and, you know, experts from the industry and stuff where they talk about the travel industry, and specifically relating to COVID, they seem to have these really gloomy expectations, like, oh, it's going to be 5 years before we see travel like we used to see. It's like, I don't know. I like some part of me just doesn't think that's real.
No, I think this year is definitely, you know, I think we have to be looking at 2 to 3 years here to get back to full capacity and the full travel. I think travel will, and it is happening this year, but specifically in cruises, people, you know, need to take steps towards being comfortable in that kind of environment. You know, I have friends that, you know, that's their thing. They take 1 or 2 cruises a year, and that's all they do. And they're avid cruise people, whatever you want to call it.
There are people. I know what you mean. There are cruise
people.
Yeah.
And they're already starting to look to book. But I think the general people that don't really take many cruises, I think they won't be looking at that first, which is why obviously we put it 4th on the list.
I don't know how many people will actually want to sort of be, after being cooped up in their homes on lockdowns and things like that, to then be cooped up on a cruise ship. I wonder whether people would prefer to sort of get out a little bit more than that. So it'll be interesting to see how that goes. I think a safer bet, which brings us on to the next stock, would certainly be UK. Well, obviously for us it'd be UK, but sort of domestic holidays, and that people will go on. That's where Airbnb comes in at number 3. Obviously they were launched during the pandemic, so no one really knows what the rebound will be for Airbnb.
Yeah,
they've had a fairly good run from when they listed, but it is so hard to tell. It's a very unpredictable stock. They always do reasonably well anyway with domestic holidays and things like that, and they won't be affected as much as something like cruises, planes, things like that.
Yeah.
But obviously when that all reopens, they'll do even better. So Airbnb is a fairly safe stock for that. I don't know what you guys think.
Yeah, so they obviously IPO'd a few months ago, but it was in obviously a bear market. You know, they opened up, I think, $144 per share. But obviously, COVID has just completely destroyed the travel and leisure industry. Something I really liked about it, obviously, with their revenue being so far down, is their revenue in their fourth quarter was down 22%, which might seem bad, but the forecast for that should have been 50% for the decline. So to come in at 22% down just shows that you know, we might see a nice incline, you know, with earnings coming out in the future, and obviously with the pandemic slowly lifting and hotels opening up and so on, we should see sales increase. So obviously it's still heavily relied on what happens with the pandemic and lockdowns, but the only negative to that would be a delayed economic reopening for Airbnb.
Or a new variant or something.
Yeah, I mean, you have the Indian variant that's just I've seen on the news recently, but people are starting to book holidays this year. The great thing with obviously Airbnb is people trying to get away from people. So, you know, they're not looking to go to the major cities, that, you know, the highly densely, you know, populated places. They're looking for the secluded places where hotels aren't there or aren't there as much from the bigger cities. So smaller cities obviously mean Airbnb will be very good for that.
Yeah, I guess when I try to think of like a valuation or something along those lines for Airbnb, I mean, just as a quick comparison, Hilton Hotels, their revenue in 2018 was $9 billion US, and currently after a rally, their market cap is 34.5 billion US. Whereas with Airbnb, the revenue is something like 2 or 3 billion, yet it's at 100 billion market cap.
Yeah.
I know it scales more, and that's probably the thing, is that it has way more growth potential than having to build out a bunch of hotels. But the thing is, I guess Hilton has shot up a lot recently, whereas Airbnb has kind of gone down. I'm not sure why that is, considering that they seem to be more resilient.
I don't think they've been let loose, you know, with their full potential yet.
Right.
You know, the share price, you know, if you just, you know, from even just the platform, you know, it's so easy to use, you know, from flexibility bookings, you know, even on the app, you know, they identify your personal goals of the trip, you know, it's such an easy device to use. Just recently,
much better experience.
Yeah, that's it. You know, 40% of the searches this year have been flexible dates or locations. So people are starting to book on Airbnb. And I think,
and I guess
I
guess pre-COVID, they were adding $1 billion in revenue every year.
Yeah.
Yeah, so they were going 2016, 1.7, 2017, 2.6, 2018, 3.6, 29, 4.7. So pretty steady growth.
Yeah. Yeah, they got a solid platform. Most people know Airbnb. You know, if you just look at the comparisons to, like you said, with the hotels like booking.com or something, you know, they'll react very similar to that. It will be very interesting when we're sort of back to not necessarily a bullish market, but back to sort of normality a little bit more, to let Airbnb sort of run, you know, because I think they're trading at, is it $160, $170, give or take?
Yeah, I think it was like 160 the last time I
checked. This is
166.
A 200 plus stock.
Easily.
Yeah.
I mean, it was 200 just in March.
Yeah, I think it was, it got above that. So, you know, this could be a 2x, 3x play. And I think obviously a bit like Carnival Cruises, when everything opens up, people are desperate to get out of the house and they're desperate to get away. And, you know, people want holidays. And Airbnb is going to be a major player in that side.
And I think a huge thing as well that people haven't really factored in a lot is the fact that a lot of companies have moved to work from home models, and that's enabled people to go overseas and work overseas. So, you think people are going to really want to work from a hotel room where they've got 4 walls and a bathroom? Like, I don't think. Yeah, people probably want like something close to a house or an apartment or something along those
Me
lines.
too. Yeah, that's it.
Yeah, with proper internet, not that free Wi-Fi that you get. It's like, you
Takes
couldn't even have a
get.
video call like this because you can't even browse the internet.
Yeah.
So I see a lot of potential there, and I think it's only up from here.
Yeah. Yeah.
Well, I don't think we go more about the numbers than number 2. With the number 2 is the Grab SPAC, which is a huge $40 billion SPAC.
One of the biggest.
Yeah, it's for 4 billion pipe, and then 750 million from Altimeter. They've also got a lock on the shares as well. So it is obviously, you guys, I know, both used them before. Big fans of delivery food. So basically, I mean, half that revenue probably comes from you guys. But
I mean, it could have been.
But yeah, they've been doing really well. The main thing about these are the diversification of their revenue sources. So they've got ride hailing, delivery, wealth management, loans, ads, gift cards, and they're not just little side businesses. They're like they're like the top in Asia for their super app. They're the top in Asia for wealth management, and then they're first in Asia for delivery. So they're doing exceptionally well in everything they seem to go into. And equally, no single country earns more than 35% of their revenue. So even if you obliterated one country, it would still be a very valuable stock.
Yeah, I mean, it's actually a COVID play as well. People don't want to go to the shops to get their food. Obviously, for me and Sam, you have click and collect at your Aldi, your Tesco. But if you try to order food, get your groceries from, let's say, Tesco, and you want it delivered, they're fully booked for like 2 weeks straight. And Grab's another player in that industry where people can get a takeaway or general groceries and have it delivered to their own house. So it is a COVID play, and obviously coming from after COVID finishes, obviously the whole taxi side starts happening. And obviously me and Jord, who have traveled Vietnam, Thailand, it's so easy to use that app and to, just one click of a button, you can have someone moped you to wherever you want to go. And it's great.
It's so highly available over there, and everyone knows about it. That's the thing. It's like, I don't know, you get into a conversation with anyone and you go, oh, like, where can I get? And they're just like, Grab. It's so synonymous over there with just getting stuff delivered or getting things done.
I mean, even with these countries, like, you got obviously Uber for what we use. These countries haven't got a huge amount of money in it, but yet you go to a little village and they still know what Grab is, because half of them are using it anyway. So I think, people are calling it the next Uber, but I think that undervalues them. I think they're definitely not a startup company, and I think they're not far off Uber. They've got the clients, they've got, for me, the demand in that.
Yeah, I think with Grab, I think whatever way you look at it, it is a good play. 40 billion as a SPAC was kind of my only concern, because although they have great numbers, 40 billion is a lot to raise via SPAC, especially on the back of what is a current huge drop in the market. I wonder how well they'll do. But equally, it is, in terms of the company and what it's got going for it, it's pretty much got everything going for it. It's got a proven track record. Like you said, it's much bigger than Uber, is it? But essentially, the groundworks are the same as Uber, except they've diversified even more. And yeah, I think that they are a really good buy. just depends on whether they reach that target and what they come out and say, because they could then come out and say, "Oh, it's a $30 billion SPAC," and everyone goes, "Oh my god, we've completely overestimated this," and it crashes again.
Yeah, there's a few things. There's also the CEO or some. I think the guy obviously is like one of the founders, and he holds 3%, or he will hold 3% of the shares, but he'll have 60% of the voting power, which I find just a little bit odd. I mean, surely there's precedent to something like that, but
yeah, it's not too odd. I mean, like I know like Ford Motors, they own a 1% family stake, but they have 40% voting rights in Ford.
right.
So it does happen a lot in the huge companies, but it does leave you wondering when someone hasn't got, like, that 3% is probably worth loads of money, but when that you say, oh, it's 3% versus he's got 40% of control essentially over the company, that is kind of difficult, because you think, well, why hasn't he got a larger shareholding in the company?
Yeah.
But yes, it's not uncommon for huge companies like these.
I think with the share price, obviously being a SPAC play, and the deal going through, I think the reason obviously we put it number 2 is if you compare it to Uber, which is trading at 55, they're already trading at just under 13. So the minimal downside risk to the upside is huge. If they were half of what Uber's worth, that's still a 2x play.
Yeah.
Which is value for money because as soon as they do merge and they are tradable, as going through Grab, this is a $20 to $30 stock at a minimum.
Yeah, I must admit, certainly how I'd play it would be to how we play most SPAC plays, obviously cash out right before the merger happens, and then buy back in as soon as it drops afterwards, because I think it is a very good long-term stock still. So it'll be very interesting to see sort of where they're at in sort of 5 years' time.
Yeah.
On the opposite end of that, then we've got number 1, which is Rolls-Royce, which is essentially the reverse. So they've been around for years and years and years, but they've taken a huge hit recently because a lot of their contracts are airlines, repairs, maintenance for aircraft. They do a lot to deal with building planes, building engines, and so on and so on. So obviously, with the airlines grounded, the airlines aren't investing in their fleet. There's no maintenance because they're not flying either. So they've been quite a hard hit. They did do a lot of redundancies equally at sort of the start of the lockdown, which obviously then drew the share price down even further. I think it went down to 88 or 80 at one point, and sort of rebounded up to 100. But you look at where it was at previously before the pandemic, and it was at 900. So really, this could, I mean, if you were to hold it long term, it could easily like a 9x. And like, I mean, previous highs are well over 1,000, so it could even go a lot further. But it will be, I think, a long term play, because it's not like airlines where they're not flying and then they are. This will take sort of a long time of building back up, because equally they'll need to rehire workforce, rebuild back up to where they were. But equally, they are government backed. They've got a lot of government contracts, so I think they're safe to invest in my opinion. And I think there could be some really good returns on them.
Yeah, I mean, obviously the downside, they have been hit really hard, and they've also suspended their dividend, and they don't know when it's actually coming back yet. And the current CEO is leaving next year, but that still gives them a lot of time to find a new one. But Wall Street themselves have undervalued Rolls-Royce by 53.5%. So it's not just your general retail traders. The big institutes have also said Rolls-Royce is undervalued. And obviously when the world opens up, the engines as well as the defense projects they have, contracts with Boeing and so on, will start to happen. Obviously their sales will start going back up. The thing obviously with Rolls-Royce, you can say they can go back to their original sort of prices, but they're entering the space sector now, which obviously we've seen with Virgin Galactic and SpaceX do really well in hype, but not just hype, just in general, because obviously Cathy Woods with ARK Invest have said, in the next decade, space will become a huge market, probably the biggest. So they've signed a contract with the UK Space Agency. On the goal for the contract is to study future nuclear power to optimize space exploration. So that's a really, really big deal, along with everything else they already currently have. You can say obviously a 9x play, but I think it's definitely a 1 to 3, maybe 2 to 3 year investment, because we're still a bit unsure about COVID. But I think after 2 to 3 years, I think we'll come out of this, and I think Rolls-Royce will do extremely well.
Yeah, I agree. To be honest, I've been saying for ages basically how good Rolls-Royce is, especially at the current prices.
It's incredibly low. I mean, looking at where we are now, I mean, it just had a little rebound today. I think it dipped under 100 for a little bit and then bounced right back up. So, I mean, maybe that's the bottom. Who knows? I'm not going to call it, but we could be close. Might be a perfect time to buy in, maybe.
I think it's only a matter of time until they start turning over profits again, as well as their dividend coming back. All these little sort of key bits, what people want. I think the share price is slowly going to go up, and each little catalyst and so on is just going to increase the price so much. And at the price they're at now is like ridiculous to what they were. So I think it's a great buy.
Yeah. Well, I think that pretty much sums up our top 4 rebound stocks. Thanks everyone for watching, and hopefully see you next time. Thanks.
See you next time. Thanks, guys.